Hello everybody, and a very good evening to you all, and welcome back to another live Taurex stream here in our Discord channel and on our YouTube channel as well. It's very good to see you all, and I do apologise for being slightly late. Well, actually, I was probably as late as I've ever been there, which just shows you how crazy it's been. We are, just to keep you in the loop, we are in the middle of building this whole setup that I've currently got into something really cool. We're going to potentially have a podcast. We're going to have some really good YouTube videos as well, and obviously a much better streaming setup than I've got at the moment. But at least I've got my microphone from back in the UK, so we're good to go. And the markets are still moving. They don't wait for anybody. So yeah, I do apologise. I was in a meeting about that, and that's why it overrun a little bit. So yeah, I do apologise. It's been a crazy time. So I do hope everyone is okay and enjoying the calm before the storm, because it's Fed day, and that means we have a new interest rate decision coming from the Federal Reserve. We also have one from the Bank of Canada coming out in the next 30 minutes as well. So I will break all of that down for you. If you are in the Discord channel, I'm going to share something with you which you won't be able to see unless you're in the Discord channel, which is why I'm going to share it with you now. Let me just quick. It's on my phone. I'm going to send it in. Here we go. And don't worry, I'm going to explain what I'm sending in. I'm going to explain what it is. It's very important because we're going to be doing a little bit of a Fed preview today, have a look at some opportunities before the Fed comes out. So let me just quickly head over to Discord on my phone, and I'm going to put it in the general chat, and I'll explain what that chart is in due time. So, if you are around today, hello to you, Bobby, good to see you. If you are around today, feel free to pop up and ask any questions. Of course, this is a recorded session, so I know people do watch it on catch up, which is absolutely fine. But come and join the Discord. The link's in the description, and you can ask any questions after the stream, and I'll answer them for you. Right. Anyway, enough of me talking. Let's head on to our economic calendar for today. I have got it here. I'm on one screen, so I do apologise. We have got the Bank of Canada today, who are set to deliver their next interest rate decision. To be honest, I'm not really that fussed about it. To be honest, I'm focused massively on the Fed later. I think it's going to be huge, not in terms of the decision, but in terms of the language that's going to be used in the conferences and stuff after. But we should mention the Bank of Canada because they are also, the Canadian dollar is a currency that a lot of people trade, especially USD CAD. So that's going to be one of our most volatile markets and volatile pairs that we're looking at. Previously, we're at 3.25%. Forecast is for 3%, which is a 0.25% interest rate cut, or a 25 basis point rate cut. Whereas when you compare that to later on, when we've got the Fed interest rate decision, you see that brings Bank of Canada rates down to 3%. But on the US side of things, 4.5% still as the interest rate for the US. So we're expecting 4.5% to be the interest rate after the meeting as well, because we're not expecting any change in the decision itself coming out from the Fed. That's not really what I'm going to be focused on as a trader, because we've already pretty much priced that in. I think we're at a 97 or 98% confidence in that. But the Fed statement here and the FOMC press conference, that's going to be the one that really drives the majority of the volatility later on tonight. So for me, I don't even know when that is. I think I'll probably be asleep, so I'm gonna have to cover that when I come out when I wake up tomorrow. So yeah, what I want to show you now is this chart that I've got, and I'm going to show it on here as well. You should be able to see it. Hopefully you can see that. Just let me check you can. Right. So essentially what this is, can I zoom in on that? I'm not sure I can. No, I can't. So this is basically a line which shows the Federal Reserve's rates compared with what the markets are expecting. So let me just zoom in on that. So yeah, where you've got this white line, this is, if you just follow my mouse here, where you've got this circle here on this blue line. In really simple terms, you don't need to go through the stuff of the actual chart itself. But what it basically means is that the markets and the Fed are in line with each other, which if you've traded before, you'll know that that's not normally the case, as you can see from the divergence in the lines and the graph for quite some time. So basically that's just an indication to us that the markets are in line. So the pricing of the US dollar and the pricing of, well, we'll say the US dollar is probably the most important thing. The pricing of the markets is correct at the moment, which isn't really a good thing as a trader, because it basically means that if we all are in agreement and the pricing's correct, and you're not going to get much movement and much volatility. What you actually want is there to be a disconnect between what the markets think and what the Fed think. And when that line starts to come back together like that, you see, that's when we start to see market movement. And he explained a lot to me, because it basically told me, if I go back onto the charts, it basically told me that the pricing of the US dollar at the moment, which is currently at 108, is about right. And it was probably the reason why I've struggled to trade Forex this year. You'll see when I go through my trading journal, like I have done on previous streams, you would have noticed that I hadn't placed any Forex trades this year so far, just commodities and what was the other one? The S&P 500. And that probably explains it, because it's not really been a great time to trade Forex. It's been better to focus on other asset classes like gold, like the stock market, or oil, for example. It's been a great mover. So when we head into the Fed decision today, we're expecting 25 basis points. Yep, fine. But the language that's being spoken about in the conference after, or the language that's used, in the conference after, that's really is what's going to drive the markets. So in really, really simple terms, which if I just put this up here, the markets are expecting another 2 interest rate cuts this year. That's what we're expecting. That's what the Fed thinks. That's what the markets think. That's what's being priced in. If the language changes today in any way, that's when you'll start to see a little bit of a disconnect, and that's when we might see the dollar kick into life. So I always give my sort of hawkish comments, which basically is something like inflation. I put it in quotation marks. Inflation too high. We must keep restrictive, or I'll just put restrictive in there if they use terms like restrictive in terms of the interest rates. Any mention on tariffs, that's going to be a big one as well. So all of those would mean, or likely mean, that we see the dollar make a move back up here. However, if the comments that come out, I do apologise, I'm on a really small screen. If the comments come out and they're less hawkish, which basically is that, rates, or let's just say indication that rates will come down this year. Inflation is falling. That's another thing that is less. Inflation is falling. Up here as well, inflation's too high, or inflation is sticky. So these are sort of comments that when we read the press conference, and I'll have to read it tomorrow. If I was in the UK, I'd be able to read it live, but I'll go through it tomorrow and just save these notes and just have a look to see if you see any language like that, because that can give you some good trade ideas. So if you get any of those hawkish comments, which are inflation's too high, inflation's sticky, rates need to stay restrictive, any mention on tariffs, that's what Trump's been going on about, or anything that's dollar positive. Less hawkish, indication that rates will come down this year, inflation is falling, or the economy is cooling or slowing. They're not going to say slowing, but something that could represent that. Okay, and that's pretty much how I would play the US dollar today. Hello to you, Dan. I hope you're all well. Thank you very much for the message. I'm doing well, and I hope you are too. And ready for probably the next 4 hours in the markets to be pretty chaotic, that's for sure. So obviously, can't necessarily trade the dollar index as such, but we'd marry that up with if we get an interest rate cut from the Bank of Canada, and then we get more hawkish comments from the Federal Reserve, well then, the easiest way to try and trade something today would be USD CAD, right? Because you'd look for USD CAD upside. Now, I've still got this same analysis in place, which is basically looking for a breakout above this really tight consolidation range that we've had since the middle of December. You can see we are threatening that high now. So that's something we need to watch out for. I actually think this is something that I'm probably not going to be awake to executing myself. But if I was, I'd be looking for something like that, a breakout above, because we can see that it's already moving quite nicely. Or what might happen is we get a rotation back down towards, and then we just have to wait for the breakout to come. Now, that's not the only thing that we need to focus on today. Here we go. I haven't had time to actually get the proper prep work in terms of these big tech earnings, but they're very, very important. So after the bell closes tonight in the US, we've got Microsoft, Meta, and Tesla all delivering their earnings report from the previous quarter. You can see by the market cap of these companies how much influence they have in, or how much weighting they have in the stock market, particularly the Nasdaq, which has been very, very volatile. So in terms of opportunities away from the dollar, because yes, I am still in gold. That trade is still exactly the same. I haven't personally closed that out or anything like that. I've got my stop loss at entry, and I'm holding really to target or to my entry, having already taken profit off the table. But on the Nasdaq, Kirkton, who is one of our members of the community, put in some great analysis, which basically was looking for something like this. So I'm sure you all heard the news on Monday. Nvidia, biggest crash in US history, 17% drop. I think it wiped like 230 billion or something off of the value, or something silly like that, which is the biggest crash in US history. And that, Curtin, if you're watching, is why we had that fair value gap that was created on the Nasdaq. You should see Nvidia. I'll just quickly go to it and I'll go back. Dan says on here that we may even get a 50-point CAD cut. Well, that would really help that USD CAD potential long, right? A breakout of that consolidation. I think that would be something that would be fantastic if we did get that 50-point rate cut. I'm interested to think why you think that. Is that what some of the analysts are expecting? But anyway, yes, this fall here, this massive gap lower in Nvidia, that was the reason. It was all because of that DeepSeek stuff, which I covered at the beginning of the week, which has sort of come out of the news now whilst we gravitate towards tech earnings and the Fed. So when it comes to trading today, I like the analysis that Curtin put in. I agree with it. Like, I think we could see, if we get a stronger, in general, a stronger earnings report, which is basically if we beat analyst expectations on the earnings per share and the revenue, positive forward guidance, that sort of thing. Obviously, you have to. I'll break that down tomorrow when they come out. I'll read what actually came out. But if we do get that, then we could see break above fair value gap, retest, maybe even a move beyond all-time highs. What I like the most, the reason that I feel like I'm bullish on this market is because of these equal highs. So if I can draw them, there we go. I have to keep zooming in. Here we go. Equal highs. Which is, if you've watched my streams before, liquidity. Tons of stop losses sitting above these highs. So it wouldn't surprise me today if we just sort of go straight through this fair value gap and up towards these all-time highs. If the Fed is slightly more dovish and, brings back the prospect of more interest rate cuts, more than 2, and we see stronger earnings, there's no reason why we couldn't see a move up to 22,000. But there's a lot of pressure on the Nasdaq at the moment. So considering we're already at this fair value gap, you probably think, well, why can't we use it as a resistance area? And we can. 50% of that fair value gap could be, if this was the other way around and we were bullish going into a fair value gap, I probably would execute that trade. The problem is, and I've said it before, is that often if you continuously try and sell the stock market, eventually you're going to be caught out, right? That was history would tell you that. And for those who watched my streams back in 2021 or 2, would know that I was constantly trying to call the top of the stock market, and I was constantly losing. So I made a promise to myself that I would only ever try and get in on dips in the stock market, and I wouldn't try and be a hero and sell Wall Street, because it's just not the probability play. So, but you could use that fair value gap as a resistance area if you are out there and you feel bearish on the stock market. That could be a really fantastic trade, and it might come through. We'd need a really hawkish Federal Reserve, and also we would need some weaker earnings across the board, a disappointment, which I think the disappointment might come on Thursday when we have Apple's earnings, but it could come today. So they're my two scenarios really. I'll just touch on gold, because I'm a little bit frustrated on that. Because you can see that silver's up 1.2% and heading up towards these new highs, whereas gold seems to be a little bit stuck. And I have now officially from today been in that gold trade for 2 weeks, because I placed that on the 16th, nearly 2 weeks. So I'm still in it. There we go. I couldn't get the right one. Still in that trade. So no update there, because once I'm already in that trade, I'm still waiting. So I will have fresh analysis on gold when if we hit our take profit area, or my take profit area, should I say? Right. Positive signs for gold though, because we did grab this liquidity yesterday. I mentioned that into this fair value gap, and then we've traded higher. So I still think that this is a good area if you find any short-term order blocks or anything to try and take this up to 2790. I just find it mad to think that we would got so close to the all-time highs without at least wicking into it and coming low, which makes me think that we're gearing up for another wave. So yeah, a weaker dollar today would represent that 100%. Okay. Pump and dump like a meme in the video. Yeah, 100%, Dan. I agree, 100%. Any other questions anyone wants me to run through, or should we leave it there? I'm going to drop this on the YouTube channel, as always, so it'll be there for you to watch as the Fed comes out. So make sure you listen to those comments potentially that are coming out, and then I will cover tomorrow what we're expecting. Okay. Thank you very much for tuning in, and I will take care, and I'll see you very soon. Thank you.